I think the one way in which we can describe the macros as we enter 2021 is like this. Would we have ever thought that what we would witness as we step into the new year is just the rise of every important indicator? Now, let me tell you, let me start first with GST collection. This is the best indicator of the growth. Indians have paid more indirect taxes than they've ever paid once GST started. This is real consumption, no taking away, no adjustments needed, clearly indicates that India is consuming much more than it ever had on a monthly tally. Let's come to the next, what business behavior or business attitude is. It's best reflected in the Purchasing Managers Index, where CEOs and purchasing managers are asked, how will your next month be? And there again, the index is almost as high as it has ever been. Some of these are high more because of base effect. In spite of this base, in December, you have such a high 56.4, clearly indicating that CEOs, India Inc., raring to go. More important, are bankers willing to lend? One of the big complaints was there is risk aversion. Now look at the credit growth chart. This is how it was earlier in the year, before COVID, and then we saw it declining consistently as more and more of India Inc. deleveraged. And now look, they're still deleveraging. In industry and manufacturing, you're not seeing growth, but services and personal loans have grown so much that now we are already at pre-COVID levels when it comes to loan growth. Well, let's look for more indicators. Imports. That was a tragic story when we had a current account surplus simply because the country was not able to consume. Okay, all that problem is gone. January, we were at $41 billion. We are now at $42 billion by the end of the year. We had dropped as low as 17. So the country is able to consume very well. Exports. There again, actually, we didn't see too much of a blip for exports. It was just that time when the ships weren't sailing, all ports were kind of disabled or locked down. Thereafter, exports did well, and they continue to, even if on year-on-year terms you may see a slight blip. We may see some blip in exports because many countries are going into lockdown, but Indian exports have been a story of growth. So, what further data do we have? Electricity consumption, rail freight, there again. We're moving more goods than we have ever moved, and now the numbers, these are year-on-year growth numbers. I mean, growing, this 15% was largely because in the previous October we had done very badly. It was a year of rain. It was a month of unseasonally heavy rains. So if you ignore this, we have been consistently going higher and higher in terms of amount of goods that was moved. Electricity consumption, most important because it clearly indicates both industrial and consumption activity. And there again, ignore this 15. Again, this is the previous October 2019, which was a kind of a bad month, but otherwise it's a consistently rising power consumption chart. So what takeaways can I get from this? One thing, be very sure that you're going to get GDP upgrades. The last number we have, the most reliable number from the Reserve Bank of India, was minus 7.5, and this minus 7.5 for the current year assumed that in the October, November, December, we will be flat, plus 0.1. Looking at the current auto sales numbers, the power consumption, rail freight numbers, Reserve Bank will have to revise that third quarter number from 0.1, and therefore chances are that minus 7.5 will move towards minus 6.5, and the average for next year could also well be revised, but that's at a later date. On Jan 7th, we will get the CSO numbers for the current year, the advance estimates. Chances are it will not be minus 7.5. It is most likely to be revised upward. But does that mean that this is all our problems are over? I'll tell you, the problems come on whether we can sustain this kind of growth. One big advantage is we're going to have very good global growth. Post-vaccine, the expectation is it will be a synchronous global growth. So that may help. But the questions are persisting more because as the months go by, will we have a problem of aggregate demand? Pent-up demand is over. What about further growth in demand? And the doubts come when you look at something like this. The mass segment of two-wheelers, already it is growing slower than, say, cars or the higher segment. Let's just look at, say, Hero Moto or Bajaj Auto. Both those numbers, if you take the 12-month graph, Hero Moto is not able to grow beyond a point. It's still growing sub 5%. So clearly, whatever is of mass consumption is still struggling. So that is why the doubts persist about growth. But clearly, the positive indicators far outweigh the negative indicators. Let's be prepared for GDP upgrades.